Vi bara att det rullar nu.
Okay. What can we expect from the Turkish economy next year?
We think the Turkish economy will grow slightly faster next year than this year, but not much. This year, growth will be around 3%, and next year perhaps 3.5%. So an acceleration, but still from a relatively muted level compared to what historically Turkey has been growing, but obviously much faster than other countries in Europe.
What are the key drivers of the Turkish economy likely to be?
Well, this year it's interesting because the main driver right now is net exports. So Turkey is exporting quite a lot, but export as a share of the total economy is relatively small. It's actually one of the smallest in Europe. Normally it's domestic demand, consumption primarily that's driving the Turkish economy, and I think next year domestic demand will become a more important driver of growth again, but together with export, because Turkey is obviously benefiting from the fact that the Eurozone is coming out of the recession.
What are the factors that have the potential to affect the economy in a negative and positive way?
Well, negatively, Turkey has a large current account deficit, roughly 6% of GDP that they need to finance. So they're very dependent on global liquidity financing from abroad. And the fact that the US Fed is about to start hiking interest rates, expected sometime in the second quarter of next year, that will make the cost of capital more expensive. That will make it also more expensive for Turkey to finance its current account deficit. When they do this, and with how quickly they do this, will impact the Turkish economy and will most likely have a negative effect on growth as well, at least to some extent. Positively, if inflation is coming down sharper than expected, that will of course help consumption. That will help them to lower interest rates, and again that will stimulate consumption, which normally is the main growth driver. So that could influence the economy in a positive way.
What risks do you see in the Turkish market?
Well, what we've seen this year, the Turkish market has been very strong this year, even though there has been a lot of potential disturbances, like a lot of domestic political noise. It's obviously a difficult geopolitical region with a lot of tension in Syria and in Iraq, and these things can of course spill over and start having an impact on the Turkish market. We haven't seen this yet, at least not to a great extent. These things can of course happen, especially now as we're seeing that the fighting in Iraq is also going to a new level. So at some point this could obviously have an impact. And then again, even for the market, the external monetary policy could have an impact. The US Fed tapering is going to end in October, and then the rate hike sometime second quarter next year. On the positive side, the European Central Bank may start to do quantitative easing later this year, maybe beginning of next year. That would obviously be a positive trigger for Turkish equities.
And what's the long-term growth prospect for the Turkish economy?
I think it's always difficult to say give a number, but I would say around 5%. If you're looking on the equilibrium or what the Turkish government is looking for, it's a 5-5-5 model. 5% growth, 5% inflation, 5% current account deficit. You could say that is their target, that's their potential. Right now it's 3-6-9, 3% growth, 6% current account deficit, 9% inflation. So they're not quite there, but the 5-5-5 is what they're aiming for. And I think it is achievable, but then they also have to do a lot of reforms.
Okay, thank you. Bra. Hur långt är det?